Welcome to Once Upon a Coin, documenting the ongoing history of blockchain and cryptocurrency. And as always, I'm your storyteller, Jason Cassidy. Today's story has us continuing our journey through the historical timeline of crypto, year by year. And what a year 2021 was. And this is where we're going to begin our tale, because once the calendar flipped over from 2020 into 2021, everything changed. And if you happen to be involved in crypto around this magical time, then you know exactly what I mean. Because the events that took place in these 12 months for some were absolutely life-changing. And if you weren't involved in blockchain in any meaningful way during the year of 2021, then boy oh boy, do I ever have a treat for you. Because this year was basically 365 days of pure nightmare fuel. Some of the events that took place here made even the seasoned crypto OGs shake their heads in disbelief. So hang on tight, because we're about to explore one of the craziest times in digital currency history. This is the story of crypto in 2021.
Sun cast a shadow, a digital line is coming over the mountain and over your mind. Go down your Bitcoin, hang on for the ride. We're moving into the future, one block at a time. We're moving into the future, one block at a time.
It's fair to say that 2021 kicked off with a bang, as by the end of January, the price of Bitcoin was approaching $40,000 per coin. It was maintaining its momentum that it had built upon at the end of last year, and now it was growing quickly. Ditto for Ethereum, which saw the price of Ether hit almost $1,400 a coin before utterly smashing through that barrier just a few days later to kick off February. On February 8th, the market got a major shot in the arm from one of the wealthiest people on the planet. Tesla announced it had just bought $1.5 billion worth of Bitcoin and was now planning on accepting it as a payment method. Elon Musk was at it again, although this time it wasn't the little furry Japanese hunting dog that was known as Doge that became the lucky recipient of his crypto affections. This news was more than enough validation that we were now in a wild bull market. When Elon Musk starts to get openly excited about crypto, you just know that a lot of people are going to start paying attention. And just 1 week later, all the pent-up energy that had accumulated over the past 3 years of a bear market was now ready to be unleashed. Like a volcano finally erupting, on February 16th, Bitcoin hit the $50,000 mark per coin, making world news in the process. And not to be left out, Ethereum was in the spotlight once again for experiencing crippling levels of network congestion. And this meant that gas fees were soaring to some truly eye-watering levels. To paint a clear picture here for you, spending $20 to $30 per Ethereum transaction was not an uncommon occurrence around this time. If this was supposed to be the future of money, paying $20 to $30 per transaction fee, then I'm sorry, the future of money was gonna suck. Binance eventually made the controversial decision to suspend withdrawals of Ether and all ERC20 tokens until things settled down. This naturally ruffled a lot of feathers, but it also stoked some concerns that there was a deeper motive behind the move. Before the month was over, it was the NFT or Non-Fungible Tokens sector's turn to make some noise. Decentraland, the first blockchain-based metaverse to enjoy some real traction, was celebrating its first birthday. On February 20th, the party started with a series of exciting in-world events that included live DJ sets and the unveiling of a new club. While Decentraland had been around for a while now as a project, this was its first full year of being an active and open metaverse. In case you hadn't caught on yet, the good times were roaring now. And it didn't matter what part of crypto you called home, fungible or not, this was the place to be. In retrospect, a big part of all this buildup was due to the reality that the planet was going through the COVID-19 pandemic at this time. This meant that a lot of bored people were now stuck at home, looking for ways to entertain themselves, and if they could make a little money in the process, well, why the heck not? Search results for crypto jumped up across the board. as people discovered that being your own bank was a lot more fun than they thought it ever could be. March saw this trend continue and actually increase in intensity, if you can believe it. Dapper Labs, the Vancouver-based company who was behind the previous bull market star performer CryptoKitties, was completing its transition over to its own standalone blockchain called Flow. And their flagship offering on Flow was tearing up the NFT price charts. And it was called NBA Top Shot. This was a licensed product that had the NBA, or the National Basketball Association, behind it. With the markets going straight vertical by now, you can probably guess what happened to this NFT project that had serious mainstream appeal. It went to the moon and back, setting sales records and grabbing the attention of the sports and collectibles industries in a big way. The story of NBA Top Shot is truly unique and one that does deserve its own episode. So you can probably guess what I'm about to say next. Yep, we already have an entire episode dedicated to the subject, waiting for you to check out. So once you're done with this one, now you know what to do. March was a really good month for NFTs. You see, unlike all the other previous bull markets that were led by Bitcoin and the cadre of altcoins that followed along, this time it was different. And when I say different, I mean really different. After many years of working out the kinks, defining use cases, and working out the technical capabilities around tokenization, NFTs were now ready for prime time. Whether it was music, collectibles, in-game items, or even art, NFTs were now the driving force behind crypto. And quite frankly, this was a refreshing change, as they were now ushering in a new cast of main characters who were taking center stage. One of these characters was Mike Winkelmann, aka Beeple. Beeple was one of many NFT artists who rose to prominence around this time and helped put NFT artwork on the industry's radar. And while a lot of other people made a splash during this era, no one out there raised their stock as much as Beeple did. I am not exaggerating here. He arguably garnered borderline rockstar status in the industry during this time period. Making a $69 million sale for your NFT artwork can do that for a man. And that's exactly what happened to Beeple on March 11th, 2021. The piece was called Every Days, the First 5,000 Days. This was a collage of 5,000 drawings, one created and released every day for the past 13 and a half years. To get big money, you need a big name, and it was the Christie's auction house that facilitated this historic sale. This also served as a major inspiration for a lot of aspiring NFT artists. If they could put the same level of perseverance and dedication into their work as Beeple had done, then maybe one day they too could set the NFT art world on fire. Other notable events in March saw the Sandbox Metaverse launch the beta version of their NFT marketplace. But once April rolled around, it was time for the fungible side of things to start making their noise. On April 14th, Coinbase, the leading US cryptocurrency exchange, went public and debuted their stock on the NASDAQ exchange. This event was considered historic, given that a crypto company was now showing up in the big leagues of traditional finance. And its ticker symbol, of course, was called COIN. It was becoming more difficult to be an investor and yet still somehow pretend that the blockchain didn't matter. If you were looking for further confirmation of this, then you weren't going to have to wait very long. Bitcoin went even higher, ripping through the $60,000 per coin barrier in April before coming back down to earth temporarily. A month prior, Bitcoin had exhibited the same behavior, showing signs that it eventually wanted to break out even higher. But Bitcoin would need a little bit of time to refuel after such a torrid run-up in price. And by the time it was fully refueled, fireworks would ensue. But you wouldn't have to wait that long if you wanted to see something special. Because by the end of April, there was more action to be had, and this time, it was Doge that was involved. The currency's unofficial mascot, Elon Musk, was at it yet again, going to Twitter to post about the famous meme coin. This had the near immediate effect of doubling up the price of the coin, sending it all the way up to 32 cents US. This was just the beginning of Doge mania though, as Elon Musk and Mark Cuban, the owner of the Dallas Mavericks, kept up the social media promotion. And with the amount of influence these two men possess, it helped send the price of Dogecoin to some dizzying heights in May. Just how high? Well, how about 73 cents US per coin high? Yeah, for a currency that started off with a value of just fractions of a US penny, this was monumental. It hit this record price on May 8th, and since then, everyone's wondered if Doge will one day reach the $1 US mark. Just a few days later, on May 12th, the NFT space got some unbelievable news from one of its top projects. CryptoPunks, the 10K collectible series that was a free mint at launch, grabbed headlines by making a record-breaking sale. Christie's, the luxury auction house that had just worked with Beeple, sold a collection of 9 CryptoPunks for a total of $16.9 million US. This price was more than double the low estimate that people thought the lot would go for. It's fair to say that this sale shocked investors from both the NFT space and the traditional physical collectible world. With all this wild action, it seemed like the only way to make even a possibly small dent in the upward trajectory of the industry would be to pour some seriously cold water on it from a major player. Well, on May 21st, that's exactly what the industry got, and they could thank the Chinese government for it. China had seen enough and felt it was time to insert some long overdue regulations into the industry. For many, what followed was more of a crypto crackdown than anything else. Once the dust settled, China had cited both the Bitcoin mining industry and trading around cryptocurrencies as their main focus of enforcement. This news went over about as well as you'd probably expect it to. So yeah, not good at all. The prices of all cryptocurrencies took a plunge, which in hindsight may have actually acted as a much needed breather and reprieve from the crazy price action that had already taken place in the first half of the year. As the spring slowly ceded control to the summer, prices across the board continued to retrace. But if you were around during this mania, then you just knew this was not the end of the madness. As it turned out, when it came to this euphoric market, we were just at halftime. The groundwork for an explosive second half was starting to kick off in the summer when some important events took place. On June 9th, El Salvador made a major announcement when they declared that they would be accepting Bitcoin as legal tender within their nation. The law would go into effect in September, clearly signaling to all that President Bukele felt that the future of his country would be running on the blockchain. El Salvador would go on to make many more headlines in the years that followed when it came to Bitcoin and accepting cryptonauts from around the globe. In fact, to this very day, it probably serves as the very best example of a country fully embracing Bitcoin and blockchain technology. Things may have been cooling off on the fungible side, but in the land of NFTs, the party was still raging on. News began coming out in July about the record-breaking sales that NFTs had garnered so far that year. Over $2.5 billion US in sales for just NFTs alone had taken place in the first half of the year. This utterly obliterated the sales from the first half of 2020, when NFT sales back then only totaled $13.7 million US. It's worth noting two things here. First, OpenSea was the main beneficiary of all this action, becoming the bonanza of NFT exchanges in record time. If you were buying NFTs in 2021, then you were almost certainly using OpenSea at some point. Secondly, a lot of high-profile NFT sales were suspected for being part of wash trading activities. This happens when one or more parties moves high-valued NFTs between each other, giving the appearance of real organic sales taking place. Sadly, it's not always easy to prove that this is happening, but it's become a real problem in the NFT space. So much so that exchange operators and regulators have tried to find creative solutions to combat it. And they've done this in the hopes of one day giving this sector of crypto more legitimacy. July also saw what would be the end of Bitcoin's refueling period. On July 20th, the price hit a low of $29,796 US per coin. This became the last call to get on board the Bitcoin train before it made its second attempt to reach the stratosphere. To fully illustrate my point, just a month later, on August 25th, the price was already back up to $49,000 US per coin. It really was an unreal summer when you put the speed of these price gains into perspective. And this becomes especially true once we appreciate that summers have historically been down periods in most markets. After all, the saying, "sell in May and go away," exists for a reason. August saw more NFT madness take place when none other than Visa got a serious case of FOMO and ended up buying a CryptoPunk for themselves. They ended up paying $150,000 for this iconic piece of digital artwork. This news put any concerns to rest about the NFT side of the bull market running out of steam during the dog days of summer. In September, new projects were hitting the scene, existing companies were blowing up, and utility-based blockchains like Ethereum were seeing increasingly high levels of usage. This meant long delays in transaction processing, and it also meant you were paying high transaction fees. The ironic thing here is that most people were willing to pay to play on Ethereum because so many cool and profitable things were happening there 24/7.
I'd buy that for $1.
Not surprisingly, this is also around the time a lot of talk about Ethereum's need for layer 2 solutions popped up. A lot of vested interests were now tied up in Ethereum. Plus, it was the blockchain that popularized the Metaverse, DeFi, stablecoins, NFTs, and a heck of a lot more. Thus, there was a big incentive to ensure that Ethereum could continue to be used frictionlessly. That's why projects like Polygon, Scale, and Scroll began to show up, looking for ways to offer power users of Ethereum a technological bridge over troubled waters. The price of Bitcoin continued to rise in October, hitting the $60,000 mark per coin by mid-month. On October 24th, history was made for Bitcoin, which is exactly what it would need to finally get over the hump and make a decisively new all-time high. The first US futures-based Bitcoin ETF, or exchange-traded fund, launched, called ProShares. This was pretty cool in that it would allow investors to speculate on the future price of Bitcoin. The fund enjoyed a very successful first day of trading, proving that this was an idea whose time had finally come. As the year was winding down, winter was setting in, but the industry was still smoking hot. New records were being set on an hourly basis, it seemed, at this point. On November 9th, one of those records made some pretty big news, and it shocked a lot of people who perhaps had foolishly decided to sit on the sidelines of this bull market. The total market cap of all cryptos combined, including Bitcoin, hit the historic $3 trillion mark for the very first time. This was one of those headlines that was too powerful to simply push aside and ignore. When you were seeing these type of astronomical numbers being associated with crypto, you really had to start paying attention to it. This news just helped propel Bitcoin forward, constituting a new all-time high price for the currency at the time. Only a few days had gone by when on November 13th, it was Ethereum's turn to follow suit. The price of one Ether soared above $4,600 US, which at that point was once again making a new all-time high. This was a glorious time to be holding the top coins in the industry, and it's pretty clear to see why. Just a few years ago, most people thought that these prices were simply not feasible. But it was happening, and it was being done with a flair that few could ever replicate. Just 24 hours later, on November 14th, the industry got some news that was definitely more substance than hype. The long-awaited Taproot upgrade to the Bitcoin blockchain finally took place. This was Bitcoin's first major update since 2017, so the act of adding something meaningful into the protocol did not go unnoticed. Taproot introduced Schnorr signatures, which would help make Bitcoin transactions more private, efficient, and much less expensive. Overall, it sounded like a pretty good idea to the Bitcoin community. Plus, once you factored in that the upgrade would also make it easier to execute smart contracts on-chain, well, most people were sold. While it was an incredibly successful year for both Bitcoin and Ethereum, they both did now have serious competition. When it came to Bitcoin, the competing forks of Bitcoin Cash and Bitcoin SV had not simply just gone away like most people had expected them to by now. When it came to Ethereum, in the previous year of 2020, both Avalanche and Solana launched as standalone smart contract-based blockchains. By the end of 2021, both had proven to be more than worthy of potential competitors to Ethereum's throne. People could visually see this as both were showing up in the top 10 of cryptocurrencies when ranked by market cap. They still had a long way to go if they ever had a hope in catching the undisputed number 2 blockchain in the world in Ethereum. But there was a narrative that was becoming clear here, and it wasn't necessarily good for Ethereum. Ethereum would have to figure out its scaling issues, even if it meant that it had to employ the help of a layer 2 solution. If they couldn't figure this out, then standalone blockchains like Solana and Avalanche might take them over, since they were looking to scale on-chain. Amongst all the crazy happenings of 2021, within crypto, a lot of activity in the DeFi or decentralized finance space took place. Activity to the tune of $200 billion when looking at TVL or total value locked. Sure, over 60% of that could be found on Ethereum, but this was also the year that a new crop of hopefuls showed up on the scene. They were looking to offer a more polished and streamlined experience when it came to DeFi, dApps, NFTs, and the Metaverse. And that pretty much sums up the year of 2021 in a nutshell. It was a surreal experience, and just creating this episode brought back fond memories. These 12 months set the table for the rest of the decade within crypto. Its impact was truly monumental. NFTs had taken the industry by storm, and by the end of it, projects like the BAYC or Bored Ape Yacht Club, the Sandbox, Axie Infinity, and a slew of others had made their presence felt. Beyond that, creative minds like Beeple, Lucio Paletti, and Josie Bellini had all become household names within the NFT art scene. Plus, exchanges like Nifty Gateway, Maker's Place, and OpenSea were becoming the digital watering holes for everything that was non-fungible. This, of course, opened up the floodgates for what unfolded in 2022. And while the uncontrolled FOMO may have been long gone by this point, something else had come and risen in its place. Something that would challenge the strength and sanity of all cryptonauts alike. And that just happens to be what we're going to be looking at in the next episode within the series. It was a new world that we had all entered into on the other side of 2021. So if you're curious, and I already know you are, then be sure to check out the story of crypto in 2022, because you aren't going to believe what happened. I hope you enjoyed today's stroll down memory lane. Until next time, have fun and enjoy life, my friends. I'll be back soon with another incredible story to tell you.